What's going on, guys? I am Jackson. Thank you for tuning into this episode of Twin Finance. Today we're going to talk about the safety of bonds. And most people think like, oh, bonds safe, like never worry about them ever. Well, first of all, I just want to say, if you go back through history, there's been multiple occurrences throughout the last 80, 100 years where bonds have went bad. For example, in 2008 when the mortgage-backed securities all went to shits, a bunch of bond investors got screwed, right? For this purpose of this video, I'm gonna leave out like treasuries and all kind of government bonds and stuff like that, because those bring in factors that are beyond the scope of this video. For this video, we're gonna be talking mainly about corporate bonds and the safety of those issues. So basically, I just want to start out with like safety of bonds, of corporate bonds. So we're gonna write corporate bonds. Okay, so basically, many people think like, oh, it's a bond, that means it's safe. Okay, the bond safety isn't determined by the name of the issue. Safety is determined by the ability of the corporation to meet its obligations. So its obligations are the amount of debt and other things it has to pay throughout the year. So say a company's income is say 2 billion, right? And it has to pay 400 million in debt that year, right? So you're looking at it covers its debt expenses 5 times with its net income, which is very substantial. So that means there's probably a very high chance that you're going to get your yield from your bond. Well, say this company had more like a $500 million in net income, and then they had to pay this much in debt. Well, if things get shaky, some of that income dissipates, or maybe there was like some unforeseen scenarios that broke loose in the business. Your debt payment on your bond, which is your interest, might not be that secure, right? So just because it's a bond, that doesn't mean, okay, I'm safe, like I can sleep at night, don't worry about it, right? So when buying corporate bonds, you have to tie in a lot of things, such as net income of the company, like the ratio of its debt to its net income. Could have a big net income, but if it also has big debt to pay, that doesn't mean it's safe either, right? So you have to look at things like balance sheets. You want to see good strength in financial statements and the company's overall standpoint. You don't want to just say, oh, is it a bond, is it a stock, oh, risky, not risky. That's not how it works. Not typically, that's just not how it works, guys. So just before you invest in bonds, you should definitely read about them. Don't just buy them off some tip that, oh, it's a safe investment, don't worry about it, because bond investors can easily get screwed over just like stock investors can, and many people don't get that, like the whole stigma behind bonds that like, oh, they're safe, right? So I hope I cleared a few things up for you guys. If you took value from this video, thank you for watching. Remember to subscribe to the channel for more interesting videos like this one. Have a great day.